Welcome back. Malaysia's Maybank saw a strong quarter in the last quarter, with profit up 9% to its highest in 2 years. The bank also reported a rise in net interest income and Islamic banking income, but the bank is warning that higher costs, trade tensions and an uncertain long-term economic policy may weigh on its profits for this year. Let's talk more about this with Feisal Zahir, Group Chief Financial Officer at Maybank Group. He joins us on the line from Kuala Lumpur. Faisal, give us a line, please, on where you see NIM's net interest income going. Are you worried that it may start compressing because of what we are hearing from the Fed?
Thanks very much. I think NIM compression in the markets we operate in, particularly in Malaysia, we do see it compressing, but it's more of a domestic concern. We see competition among deposits as a lot of local banks are striving to meet their net stable funding ratio targets, which they have to meet by 100%. So I think it's more of a domestic thing. In terms of liquidity, it's still quite flushed. In Indonesia, we also see compression as well, and that is more from a more sluggish growth and also competition for deposits. I think the outlook for the rate hikes in the U.S. has somewhat tapered a bit compared to what it was before.
And Faisal, part of the reason is that the Fed too is worried about the slower growth outlook globally and the trade tensions being one of the issues they are watching as well. It was interesting to see that you flagged trade tensions as perhaps a concern going forward. And we hear this from many businesses, but it does mean different things to different corporations. And can you give us a better idea of where you are seeing the concern specifically for your business for loan demand?
That's exactly right. I think for Malaysia, Singapore and Indonesia, the largest trading partner outside of ASEAN would be China. So if you do see a slowdown as a result of the trade tensions between the U.S. and China, obviously it has an impact on the ASEAN economies. However, that would be more of an immediate impact. I think longer term, the region stands to benefit if businesses readjust their supply chains and use ASEAN as a possibility to base their manufacturing. So potentially it could have additional FDIs into the region, but that would be longer term. I think the immediate term is a concern.
Feisal, can you give us a line on asset quality? Where do you see that going?
Asset quality, you've seen from the Malaysian banks that asset quality charges has improved somewhat. We are still concerned about certain areas such as the real estate sector, markets such as oil and gas is something that we still look at, power sector in Singapore. But I think overall we see a better trend than the high peaks in the previous years. Nevertheless, I think we're still quite cautious on asset quality.
Faisal, going back to what you said about the Indonesian market too, you've highlighted some competitive pressures there already. Given that we're looking ahead to the consolidation plans in Indonesia for the state-based banks there, does this provide any concerns to you on a competitive front?
On a competitive front, I think the country has, how shall I say, there's a lot of growth potential and also infrastructure build that the country can develop. And it actually helps have the consolidation. So the players can have the financial strength in order to build out the infrastructure and competitiveness for the country. So while the banking landscape may be competitive, I think the opportunities are there, is positive, I would say, as a result of that.
And Faisal, domestically, this May, it will almost be 1 year for the new government. Are they hitting the mark from your point of view, or do you fear that policy making is being distracted perhaps by this attempt to try to draw a line, a much needed line, I'd say, under the whole 1MDB scandal?
Well, you rightly point out they haven't reached their first year anniversary yet, and they have been, I suppose, focusing on the immediate pressing issues such as fiscal as well as governance matters. But when you look at what they are doing, they've just established the Economic Action Council, and the council has yet to be met, and these are the longer term economic growth policies is something that they are looking at, and I don't think they hear feedback from the industry, and that's something that they will focus on and they need to focus on going forward.
Okay, and do you expect to see further weakness in the Malaysian economy, Feisal, because you guys are quite exposed to the trade story? Just following on from that, do you think Bank Negara, the central bank, the policy settings are appropriate at this point in time?
From a rate perspective, let me talk about rates first. I think we have inflation under check. It's a bit subdued, so there's really no reason for rates to increase. Our view is it will be maintained. So in that sense, I think at least from a monetary perspective, it's conducive for growth. We do see an impact of trade. Nevertheless, there's a lot of domestic growth. We still see a move to affordable housing, at least for the real estate sector. We saw the revival of some of the infrastructure projects, such as the LRT3. So you still have that momentum. And also, if you look at CPO prices have rebounded. It's close to 2,000 level, as well as crude prices at the 60 to 70 $70 per barrel for Brent. So that's a comfortable range for the whole economy. I think we do see impact for trade, but there are other things that can compensate it. Our forecast for GDP for Malaysia is about 4.9%, slightly better than last year.
Feisal, on that note, we'll leave it there, sir. Thank you very much indeed for joining us today. Feisal Zahir there, Group CFO at Maybank Group. And final thoughts with Manpreet Gill coming up later on in the programme. Right, in earnings out of Malaysia, AirAsia reporting its first quarterly loss